XRP is sitting at the top of the same channel it has tested 4 times this year. Trump just declared Iran's response totally unacceptable. And in 72 hours, the most important crypto vote in American history happens. Place your bets, because what comes next has been 4 months in the making. XRP Army, I just landed. And as I was flying across the country, the market did not stop moving. There is a speaker right behind me that is bleeding into the audio, so apologies in advance. But I am genuinely glad I had this microphone ready because what is happening right now demands a real-time breakdown, not a polished studio video. By the end of this video, I am going to walk you through exactly what is happening on the chart, what Trump just said about Iran, why the markup vote on Thursday is the most important event of the entire year for XRP holders, and what the structural pattern on the chart is telling you about what comes next. We are once again at the top of the channel. The price could dip slightly from here, that is expected. But the structure that has been forming for 4 months is now in position, and the catalyst that releases that structure is 72 hours away. But this is the part almost nobody understands. Let me start with what Trump just said because it is going to dominate the macro narrative going into Monday's open. Trump just read the response from Iran's official representatives to the proposed deal, and his public statement was direct. He said the response is totally unacceptable. Those are his exact words. Totally unacceptable. What that means in practical terms is that the diplomatic path that the markets had been pricing in some optimism around is not advancing on the timeline the administration was hoping for. The Iran situation is not de-escalating. The blockade is not ending. The pressure on the Strait of Hormuz remains. And oil prices, which have been one of the biggest drivers of sticky inflation across the global economy, are going to stay elevated for at least the next several weeks while the diplomatic process restarts. That has immediate implications. Oil prices stay high, inflation stays sticky. The Federal Reserve under Kevin Warsh has less room to cut rates aggressively, and risk-on assets like crypto continue to operate in the macro environment that has been compressing XRP into this 4-month consolidation range. But here is the part the macro pessimists are missing. Trump has been publicly telegraphing for weeks that the administration expects oil and gas prices to come down before the midterm elections. He is going to make that happen, one way or another, through diplomacy if it works, through pressure if it does not. The political incentive for the administration to deliver lower energy prices ahead of the midterms is one of the strongest macro forces operating in this market right now. When oil prices come down, inflation cools. When inflation cools, the Fed has room to cut rates. When the Fed cuts rates, risk on assets explode. And that sequence is exactly the macro setup that the institutional players are positioning for in the second half of this year. And this is where the story becomes dangerous. Now let me show you what is happening on the chart, because the price action over the last 48 hours is telling you something specific about where we are in the cycle. XRP is at $1.45. It moved from $1.41 up to $1.51 while I was in the air. Only 10 cents. Most people will look at that and say it is not exciting, 10 cents is nothing, but the position on the chart matters more than the move itself. Let me zoom out for you. We are sitting at $1.45 right now. The all-time high of this cycle so far was $3.65 in July of 2025. But more importantly, we are tracing the exact same pattern we started building in the middle of 2025. Look at the structure. We are consolidating at the top of a channel that has held for 4 months. Every time we have tested the $1.50 level, we have either broken through briefly or bounced back into the range. This is the same pattern that produced the breakout at $1.50 back on April 17th. We hit that level, we faded, we came down to $1.34, we rebuilt, and now we are back at $1.50 with a very different setup behind us. The Clarity Act has cleared the Senate Banking Committee. The bipartisan margin was 15-9. 2 Democrats crossed over. The full Senate floor vote is scheduled in the next 30 to 45 days. The White House is targeting July 4th for the presidential signature, and the structural compression on the chart is at the tightest level it has been since this cycle began. What that combination is telling you is that we are not consolidating in fear. We are consolidating in preparation. Now here's where things get serious. Here's the technical detail worth slowing down on. We have a double top at $1.50. The first attempt happened on April 17th. The second attempt is happening right now. After the April attempt, we came down to $1.34 before reorganizing. There is a realistic scenario where we test that level again before the next leg up confirms. If you are looking for an entry, that potential dip into the 1.34 to 1.40 zone is exactly the kind of pullback that has been delivering institutional accumulation opportunities throughout this entire consolidation phase. The whale wallets that absorbed 1.15 billion XRP in April did not buy at $1.50. They bought at $1.38 when retail was nervous. The patient holder who is reading the chart correctly is not panicked by the possibility of another dip. They are positioned to add into it. The resistance above us sits at $1.61. The next major resistance after that is $2.20, which is the upper boundary of the next consolidation range. From $2.20, the path to $2.80, Standard Chartered's near-term institutional consensus, opens up. And from $2.80, the order book resistance thins considerably toward the $3.65 all-time high and beyond. The math of the move favors the patient holder. The downside from here to the structural floor is roughly 8 to 12%. The upside to the year-end consensus range is 200 to 300%. That is the asymmetry of the setup we are sitting in right now, and what happens next changes everything. Now let me bring in the broader context that the chart is not showing. Bitcoin briefly broke back above $100,000 and is now trading just below it. The Dow Jones is at all-time highs. The S&P 500 is at all-time highs. The Russell 2000 is participating. The macro risk-on environment is showing up everywhere except in crypto specifically. That divergence matters. When traditional equity indices are making all-time highs and crypto is consolidating sideways, the relationship between the two is being temporarily distorted. The distortion has a name. It is institutional capital that is currently allocated to traditional equities, making rotation decisions about when and how to deploy into the next sector. Crypto is one of the candidate sectors for that rotation, and the rotation does not happen on retail timelines. What it requires is a catalyst, a specific event that gives institutional capital permission to redirect into crypto in size. The Clarity Act passing the full Senate is exactly that kind of catalyst. The presidential signature is exactly that kind of catalyst. The first major institutional partnership announcement that follows signature is exactly that kind of catalyst. We are at the point in the cycle where the catalysts are coming into view on a defined calendar. Not theoretical, calendared. But this is the part almost nobody is connecting. Trump is also reportedly heading into a meetup with Chinese President Xi Jinping in the coming days. That is another macro event that the markets need to price in. If the US-China relationship continues to stabilize after the recent successful trade deliverables, including the reported Boeing 200 plane sale and the soybean purchase commitments, the macro tailwind that already started developing last week extends further into the back half of the month. Trade clarity reduces uncertainty. Reduced uncertainty allows institutional capital to take on more risk. Increased risk appetite eventually flows into crypto. The sequence is mechanical. It just operates on a longer timeline than retail expects. While I was flying, the price was moving in real time. The fact that I am now landed and have time to walk through it with you is an opportunity to slow the analysis down and look at what is actually happening underneath the noise. Turn notifications on if you have not already. We are always watching, always trading, always positioning, because the moments that matter most in this market do not announce themselves with banners and press releases. They show up on the chart while you are looking at the wrong screen. Now here's where things get serious for the markup vote. Thursday is the date. The Senate Banking Committee markup of the Clarity Act has been scheduled. Place your bets is the phrase circulating in the community right now, and it is appropriate, because the political math going into Thursday is uniquely fragile and uniquely promising at the same time. 13 Republicans on the committee, 11 Democrats. Chairman Tim Scott needs all 13 Republicans to vote yes. That is the red zone target he has been working toward for weeks. 2 Democrats are realistic targets for crossover support based on prior public positioning and committee dynamics. Senator Angela Brooks and Senator Ruben Gallego. If the bill clears committee with bipartisan support, the path to the Senate floor opens immediately. If the bill stalls in committee, the entire timeline shifts back by months, and the July 4th signature target becomes structurally harder to achieve. That is the binary nature of Thursday. Pass or postpone. There is no comfortable middle. The retail community is watching the markup vote as a procedural event. The institutional community is watching it as the trigger that releases the next phase of capital deployment. 2 different rooms looking at the same event with 2 different time horizons and 2 different stakes, and this is where the story becomes dangerous to dismiss. Let me address something directly. I know some of you are tired of seeing XRP at the same level for so long. I hear that. The 4-month consolidation has been brutal on the patience of holders who have been positioned the entire time. Every week that passes without a breakout feels like another week of waiting that did not need to happen. But I want to reframe that frustration for you. Because what you are experiencing as boredom is the institutional accumulation phase that produces the next leg up. The boring months are when the smart money builds positions. The exciting months are when the chart reflects the positions that were built during the boring months. You cannot have one without the other. If XRP had been ripping for the last 4 months on every minor catalyst, the institutional accumulation would have been impossible to complete. The price would have outpaced the buying. The supply that was available to be absorbed would have been gone before the institutional positioning was finished. And the breakout that comes when the consolidation completes would be a smaller, weaker, less sustained move. The boring months are not the absence of progress. They are the structural mechanism by which the institutional players complete the work that the retail community cannot see. Because once you understand what consolidating at the top of a 4-month channel actually means, you realize patience wasn't the price of the position. It was the prerequisite for the breakout. Now here's where things get serious for the accumulation thesis. So what do you do with that information? The answer depends on where you currently sit. If you are fully positioned and you have been holding through the consolidation, your job is to hold. Do not get shaken out by a potential dip back to $1.34 if it happens. Do not panic sell if the macro environment delivers another bad inflation print. Do not let the noise of the next 72 hours separate you from the structural position you have been building for months. The catalysts you have been waiting for are in front of you on a defined calendar. The setup you have been patient through is at the most compressed point it has been since the cycle began. If you have dry powder and you are looking for entries, the next 72 hours is a meaningful window. The committee vote on Thursday produces one of two outcomes. Either the bill clears and XRP breaks the $1.50 ceiling into the $1.65 to $1.80 cup and handle target range, or the bill is postponed and XRP drops back into the $1.34 to $1.40 zone for another round of consolidation before the next catalyst window. Both outcomes produce buying opportunities for the patient holder. The first one rewards the position you take before the vote. The second one delivers a deeper entry for the position you take after the vote. Either way, accumulation through this window is structurally favorable for the holder with a 12 to 24-month time horizon. And what happens next changes everything for the meme coin chasers. Now let me address something that I have been seeing more of in the community lately. Some people are getting frustrated with XRP's sideways action and rotating into meme coins. They are chasing 10 times moves on tokens that did not exist 90 days ago. They are following crypto influencers who are pumping the latest narrative coins because the influencer is paid to do so. I want to be honest with you. I am not going to tell you what to do with your money. If you want to take a small allocation and play in the memecoin space, that is your decision. There are people making real money on memecoins right now. Some of them are my friends. But I want you to understand the structural difference between what XRP is and what those tokens are. XRP has been through a multi-year SEC lawsuit and survived with legal status intact. XRP has institutional infrastructure built around it that took a decade to assemble. XRP has the regulatory positioning in the UK, the EU, Japan, and the UAE that allows it to operate as a settlement asset across the largest financial jurisdictions in the world. XRP has the Ripple Treasury platform sitting on $13 trillion in payment volume. XRP has the Clarity Act locking in its commodity status through federal statute. Memecoins do not have any of that. The 10 times moves they produce are real. The structural foundation underneath them is not. And the people who treat memecoin gains as a permanent shift in their financial position are usually the same people who give those gains back during the next correction. The XRP position you build during this consolidation is not the same kind of position as a memecoin position. It is a structural allocation in the transition of the global financial system. Treat it that way, size it that way, hold it that way. Now here's where things get serious for the consolidation pattern. Let me come back to the chart one more time, because I want you to see the full structural picture before we close this video. We started this consolidation phase in late January, February, March, April, May. 4 months of compression inside a defined range. Every test of the upper boundary at $1.50 has been followed by a controlled fade back into the middle of the range. Every test of the lower boundary around $1.28 to $1.34 has been followed by an institutional bid that absorbs the supply and pushes the price back toward the middle. That is not a distribution pattern. Distribution patterns show progressive weakness on each subsequent test of support. Lower lows, reduced volume on the rallies, increased volume on the dips. None of that is happening here. The pattern is the opposite. The supply at the lower boundary is being absorbed faster on each test. The bids are appearing at higher prices each time. The volatility is compressing into a tighter range as we approach the breakout point. This is the textbook structure that precedes a major directional move. The longer it compresses, the larger the move when it releases, and we have been compressing for 4 months, which means the move that releases this structure is likely to be the largest single directional move of this entire cycle so far. That is the structural read. That is the reason the patient holder is not panicking at $1.45. That is the reason the institutional players are still accumulating. That is the reason the Lummis-style political signals matter more than the daily candle close. But this is the part almost nobody is sitting with. The market is going to keep doing what the market always does in these windows. It is going to test your conviction. It is going to bounce around in ways that feel arbitrary. It is going to make you question whether the thesis you built is actually right. It is going to deliver headlines that feel bullish on days when the price drops, and headlines that feel bearish on days when the price rallies. None of that noise is the signal. The signal is the structural pattern. The signal is the calendar of catalysts in front of us. The signal is the institutional positioning that has been building underneath the chart for years. The signal is the political environment shifting in ways that the headlines are not capturing. Patience is the price of the position. The discount you receive for paying that price is the entry level at which institutional players are also positioned. The premium you pay for not having patience is the higher entry level you will have to accept when the catalysts confirm and the chart breaks out. Choose your price now, or accept the price the market gives you later. Now here's where things get serious for what is coming this week. Here is what I am watching specifically over the next 7 days. Thursday's committee markup vote. The political math heading into the vote. Whether 2 Democrats actually cross. Whether the bipartisan margin is the 15-9 outcome that opens the floor vote path, or the 13-11 outcome that creates uncertainty going into the next stage. Monday's market open in Asia is already happening as I record this. The Asian session reaction to Trump's Iran statement and to the broader macro setup is going to set the tone for the US open. The institutional desks in Japan, Singapore, and Hong Kong are processing the same information right now that we are walking through here. The macro data prints over the next 72 hours, any inflation surprise, any unexpected statement from Kevin Warsh at the Federal Reserve, any commentary from the Treasury or the White House about the trade deal progress or the Iran situation, each one of those data points moves the probability weighting on the catalysts I have been describing, and the price action on XRP specifically, whether we break through $1.50 cleanly or whether we double top here and fade back into the $1.34 to $1.40 zone. Both outcomes are tradable. Both outcomes are part of the structural setup. Neither outcome breaks the thesis. And this is where the story becomes dangerous to ignore. Let me close with this. The XRP holders who are going to look back at this period clearly are the ones who understood that the consolidation was not the absence of progress. It was the mechanism through which progress was being built, the whale accumulation, the institutional positioning, the political environment shifting, the legislative trajectory advancing, the macro setup completing. All of that has been happening during the months when the chart was boring. And the chart was boring precisely because the work that needed to happen was happening underneath it. The chart will become exciting again only when the work underneath it is complete. We are getting close to that point, not because of speculation, because of the calendar of catalysts that are now scheduled. Place your bets. That is what the community is saying about Thursday, and it is appropriate. Because Thursday is the first major release point in the catalyst sequence that defines the next 90 days. I am excited about where we are. I am excited about what is coming. I am excited about the people in this community who have held through the boring months and are positioned for the exciting ones. That is the journey. That is the patience. That is the conviction that gets paid in this kind of structural cycle. One more thing before you go, I want to let you know that we have officially launched our new Facebook page for this community. The page is called Power Wealth. I have pinned the link in the top comment of this video so you can find it instantly. If you spend more time on Facebook than YouTube, or if you have friends and family who follow crypto coverage on Facebook, the Power Wealth page is where I am posting the fastest breaking news reactions, the macro analysis between videos, and the additional context that does not always make it into the full YouTube breakdowns. Power Wealth is where this community is being built across every platform. The goal is simple. Make sure nobody in the XRP community misses what is happening during the most important 60-day window in this asset's history. The committee vote on Thursday, the Senate floor vote that follows, the presidential signature targeted for July 4th, the 90-day operational window after signature. Every one of those events is going to be covered on both YouTube and on Power Wealth on Facebook. Click the pinned comment, follow the page, drop a like on the first post you see when you get there, and share the Power Wealth page with anyone in your circle who is holding XRP and wants the analysis that goes deeper than the surface headlines. Channels don't hold forever. Patience doesn't go unpaid forever. And the people who held through the boring months are the only ones whose hands will still be on the wheel when the ruthless part of this cycle begins. XRP Army, keep an eye on this week. It is going to get ruthless, and we are going to enjoy every minute of it. Be safe, take care. I will see you in the next one. Peace.